Welcome back. We've spoken a lot about rising mortgage and interest rates on this program because they impact a lot of people. Mortgage rates are rising again this week. So what can consumers do? What does this mean for homeowners and sellers? Well, Conrad Neufeld is an award-winning mortgage broker, and he joins us right now. Mr. Neufeld, I want to thank you so much for being with us today.
Thanks for having me again.
All right, so let's case out the situation. First off, where are we at for 5-year fixed mortgage rates? Have we started to eclipse the 5% mark?
Yes, we have. There are several people who have their posted rates, several lenders that have their posted rates above 5% now. And even some of the quick close specials where, you know, the discounts that you get are even nearing 5% now. So I mean, you still can get 4.69, 4.79, but we're nearing in on 5% as an average.
Yeah, and obviously if you want to get below 5%, that likely hinges on having, you know, very good credit and other things like that.
Exactly.
How fast are these mortgage rates rising? I mean, could a person literally see a higher rate in a matter of weeks?
They're rising very, very fast. We're in a situation where mortgage rates, both variable and have fixed, have been moving, you know, faster than the 1990s, right? Like it's been a while since rates have moved this fast. And, you know, we're getting daily rate changes that are coming through with multiple lenders saying, hey, we're rising rates tonight at midnight. So, you know, if you delay even a week or 2 weeks to lock in a rate, you could see a higher rate and as a result, even a lower pre-qualification just because of the rate changes.
That's interesting that you've said, you know, since decades, it's been decades since we've seen something like this. What is the average size of mortgage in Saskatchewan or Saskatoon? And what percentage of mortgage holders have an adjustable rate?
So it's a good question. About 280,000 to 290,000 tends to be the average mortgage size in Saskatchewan. And about 12 to 15% of Canadians as a whole are on some kind of adjustable rate mortgage, meaning as the interest rates changes, so too does their payment.
And how much have those payments risen over the last 3 or 4 months? Do you have some numbers on that?
Yeah, so the payments have changed quite a bit, obviously, right? Because we've seen 1.25% bump up in the Bank of Canada's overnight lending rate. That tends to translate exactly into what people are seeing on their variable rate side. You know, 6 months ago, we were locking in 5-year fixed rates under 2%, and now they're close to 5%, right? So you're talking about a 250% change just on fixed rate mortgages, right? And on the variable rate side, you've got, I mean, like I said, there's only 12 to 15% that are feeling the pinch on a day-to-day basis. The rest of the other variable rate mortgages have locked in payments. But I mean, whenever you see a change in payment, or a change in rate rather, for every $100,000 that you have and for every 25 basis points or quarter point change that you have in the Bank of Canada, it translates to about $12 to $13 worth of monthly mortgage payment. So it doesn't sound too bad at first until you start doing the math and realize that the change from March onward basically means that people in Saskatoon, for instance, on average have seen a change of about $181 per month since March, right? So that tends to stack up. That's about 2 to 4% of people's after-tax incomes going straight to interest.
I want to ask, are more and more people calling you who are nervous about their situation with their mortgages right now?
I would say there's a steady call of people coming in saying, hey, look, like, what should we be doing, right? Like, our mortgage renews in a year or 2 years. What should we be doing? You know, ironically, most of them are in fixed rate mortgages. They're not even in variable. They're not even panicking about the now necessarily. What they're actually panicking about is what happens when my mortgage renews. You know, I'm used to 2%. What do I do now when it's 4%? What do I do now when it's 5%? And so we're having a lot of conversations about, you know, some of the timing of the market and some of the strategies around what people should be doing, you know, depending on when their mortgage renews.
Okay, so I mean, how far in the future can we predict? Let's say you have to renew your mortgage anytime in the next year or two. What options do you have as a mortgage holder with a fixed rate or even a variable rate to try and mitigate what could be a much higher interest payment if you have to renew your mortgage, let's say later this year in 2023 or maybe even early 2024?
Yeah, the time frames get a bit tricky, and it depends, of course, on a bunch of different things, including what kind of product they're already in. But if you're less than 1 year, now's not a bad idea to start having those conversations, right? Because you can start trying to forecast, well, if I wait, how much is that going to cost me in the short term? It's much easier to forecast short term than long term, obviously. Anything beyond a year, though, especially if you're in a fixed rate that was locked from a while ago, I mean, you might as well just let it ride, and enjoy the savings that you locked in from before. If you're in a variable rate already, what you might want to consider if you're in one of those adjustable rate mortgages where your payments do change with the climbing interest rates and you're concerned more about stability of your income and your cash outflows and outflows than the actual pursuit of interest rate savings, you might want to consider looking at static variables. You pay a little bit of a premium for that stability, but you end up in a situation where your payments get locked. And if you use that as an option right now to lock in the payments while they're still relatively lower before a multitude of other Bank of Canada adjustments, you could theoretically lock in a lower variable rate payment, allowing you to to help with other costs like rising gas, rising food, etc.
So what about, on a fixed rate, let's say you got to renew in the fall of 2023, early 2024. Is it advantageous to look at how you can possibly pay down a bit more of your mortgage now so that interest rates, if they are much higher, it sort of mitigates the expanded payment, I guess, if you will?
So super good question. Yes and no. The truth is that if you have a ton of other unsecured debts, so like lines of credit, student loans, visas, those kind of things, you're going to want to focus on those first because they're having the most immediate impact on you. They're not affecting you, a year from now or 2 years. They're affecting you now, right? Those are already on the rise. And those tend to have a much larger impact on your current financial situation. So paying those off first. If you happen to be in a situation, though, where you don't have those concerns and all you have is the mortgage, then yeah, absolutely. Start paying it down faster and try to put yourself in a situation that come renewal, it's on a much lower mortgage balance. Absolutely.
Conrad, is there anything else that you wish to add?
Just, I think people should pay attention more to cash flow stability, or payment stability, right? I mean, if you're in a situation where, you can gamble a bit and try to go for lower interest savings with the adjustable rate mortgage, great, have at her. But I think more people than ever before should be looking at the static variable in particular.
Conrad Neufeld, award-winning mortgage broker. I want to thank you so much for being with us today.
Thanks for having me.